to our presentation this afternoon from Advanced Futures Intelligence, Success in the Market. We are getting some Fed stress tests news here too coming out of the market, and the market selling off on that. If you were in the markets this afternoon, what a ride for those of you who were in the trading room and caught the bid at the 75.75 area, which was the overnight highs, and the support area there from the first standard deviations. Some of the people in the room had a very nice run up. And again, those kind of trades don't happen all the day, but what I'm going to show you tonight is how to be successful in the marketplace and to know where to take trades from. Real quick here, disclaimer. Again, Advanced Futures Intelligence and all the individuals affiliated with this presentation assume no responsibilities for your trading and investment results. This is for educational purposes only, and hopefully it will stir something inside of you to be interested in asking more questions. And those questions we can get answered for you from our agents that will call you and work with you in answering those questions. My name is Rick Vinecki. Again, I've got 10 years of experience in teaching and trading the financial markets. I specialize in teaching market structure and market profile. Teach people how to generate daily income in the trading room using the futures market. Mostly trade the S&P and the NQ. We'd also look at crude oil and YM and anything that really moves. And then be able to accumulate wealth with using some options for IRAs and things like that. And again, teaching you more of decision-making tools. Ultimately, I can't twist your arm and make you click the mouse. I mean, I can point you in every direction that I can, but ultimately it's your decision at the end of the day to click the actual mouse. Today's topics, what I want to talk about, are defining a successful trader. What does it mean to be a successful trader? Understanding the flow of the markets, and 2 stages of market activity, supply and demand, and defining your edge. And we'll look at some charts as we get towards the end of this and how we actually put this all together. What makes a successful trader? Well, first of all, a methodology that works in all markets and in all environments. And as you see throughout this presentation, and for those of you taking the courseware, you'll see that the Trader IQ Trading Success Program will lead you to this. All right, trading plan, do you have one? Do you have a plan every day? Have you considered risk management? Risk management, anytime you put your money in the markets, it's at risk. So knowing where to take risk and when not to take risk is very important in being successful in the marketplace and staying and having staying power. You can get eaten up pretty quickly in the futures market if you're not taking trades at the levels in which you should be and knowing where you have a higher probability. Plan your trade and trade your plan each morning. Do you have a trading plan that you've already kind of laid out, if you will? Again, this is not elementary school. This is grad school. And one of the things I like to show people is this map. You think about a map. We all want to reach for the dollar signs over there on the other side, but when you think about the pioneers coming across the sea, it was hit or miss as to what shoreline they were actually going to hit. They knew there was land over there, and as you're trading like that, you can make some money or you can lose some money. You're going to just kind of hit or miss the other side, or you're really going to have a map as you reach each and every day and planning out your trades. Failure to getting to your destination in the financial markets, random guessing. Maybe I should go long here. Maybe I should go short here. Is this a good entry? That indecision, if you will. No rules to follow. What I'm going to show you will teach you to have some rules and where to trade from. I'm only supposed to go long at the value area low, or I'm supposed to go short at the value area high when a market is in rotation. Depending upon someone else, like the blind leading the blind, if you will, or some holy grail system waiting for some sort of a red light or a blue light to flash on your screen in order to take a trade. My favorite is when I'm working with coaching clients and seeing this, I call it analysis by paralysis, and I've actually got a chart here later I'll show you of some charts that really cause your brain to just freeze up, and you can't make a decision because you've got so many things on your chart that you just don't know what to make a decision from. Then, of course, the lack of education, learning the ropes, if you will, from someone that has walked the path and is being successful in the marketplace each and every day. And again, that's what the design of our Trader IQ program is to take people and hold them by the hand, if you will, and teach them this methodology that works in the marketplace. Now, arriving at success, of course, the ultimate goal is that money pile right there that you collect at each and every day. Cash it into your accounts. You've got the money by precise execution, if you will, precise. Like I said, having a map or having a plan each and every day of knowing what is my bias going into this morning's trade. Am I long biased? Am I short biased? Maybe I don't really have, I'm neutral, if you will, which causes me maybe to be more in what I would consider a scalp mentality, if you will. Non-emotion, trading without any sort of emotion. If you have a plan and you're reading and understanding the flow of the markets, you'll know where you want to take trades from and let the market come to you in order to participate in that particular auction. And again, this methodology will define the rules for you. And there's no guessing in where you should be going long or where you should be going short. It helps you identify and stay on the right side of the trade. And that's where that non-emotion thing will come into play, keeping you out of it. And of course, the education that works through our Trader IQ program, that is what you'll get through this, and understanding of how to arrive at success. Now, understanding the flow of markets are very important because in order to do this, you have to understand why the markets move. You know, some people will say, well, it's pure price, you know. Well, yes, and it's about the auction process. It's about supply and demand. Price is determined by what? Buyers and sellers that dictate what the true value of anything in the marketplace actually is. Now, buyers will establish value based on what? Now, again, you could take this right down here at the bottom and apply it to really anything, whether you're buying tractors, you're buying cattle, maybe you're buying a new iPhone, maybe you're buying a new boat for the summer. It's based on, number one, the uniqueness, the availability, and what the market will accept. No matter what the item is, it's only worth what someone else is willing to pay for it. Education of product knowledge. Now, if you want to go and you want to sell your car tonight, you're obviously going to go on Craigslist or you look in the newspaper of some sort, and you're going to get some sort of a value, you know, what it's worth. And you're going to go ahead and you're going to list it. Now, if someone has done their homework too and they feel as though that may be overvalued, or they might offer you a lower price. So the market, why the market moves is because of this auctioning process. It's no different than going to a real live auction or using the marketplace or product knowledge, if you will, to dictate what that actual price should be on a particular item, or in this case, we're talking about the financial markets. Now, value in the market, there's activity that flows both two phases. It's time frame dependent. The first one is balance or horizontal development, which we've actually been in on the S&P for quite some time until today. And now we have this imbalanced state, this vertical development, where price is seeking what? New value. We've obviously have new demand stepping into the marketplace, and this is when we get this vertical development. Lucky for us, there are only these two phases of the market. And the education process will teach you how to recognize when a market's balanced. And a balanced market, we want to think of it as a market that is accepting, or it's in consolidation phase, if you will. Put yourself in the shoes of a good businessman. You're opening a new retail store. What are you going to do? You've got to fill your store with inventory, and you're going to fill your store with items that are at a wholesale because you want to sell them at retail. You want to make money, buy low, sell high. As value-based traders, this can be one of your most profitable setups, is when you recognize a market that is balanced, because your job is real easy. You're buying the lows and you're selling the highs. And again, this goes back to identifying structure in the marketplace and understanding the flow of the markets. The market is constrained by the liquidity here of both the buyers and the sellers. This is why you get this auctioning process of these unfair lows and these unfair highs. Now again, this is time frame dependent, and it's very important that you understand when a market is balanced and when it's imbalanced, because it teaches you how to play the markets. If I'm in a balanced market, I'm not looking to hit home runs. I'm looking to play the value area of what the market is actually giving me at that particular time. So when we reach the top portion of this, we obviously have supply coming in, and at the bottom we have demand. Sellers at the top, buyers at the low. So you don't expect much. When you're looking at risk management in the trade, you're looking at, all right, well, if I'm getting long, I'm putting one side of the market at my back, and I'm looking for my target objective. The market's in consolidation at that point. And again, the ES market was in a nice consolidation here of about 50 points over the last few weeks here. Now we have an imbalanced state, which is the next slide here. You'll see what that means to us in the marketplace, because the market will always go from balance to an imbalanced state because it's always seeking new value. Here's a actual chart of the ES market over, this was actually I think a 30 or 60 minute chart. And you can see for the most part this is a market that's balanced. You've got your relative equal lows, your relatively equal highs. It basically looks like the same chart that I just showed you a few minutes ago. And one of the things that I'll teach in the class is we talk about a word called probes. And this is something that we go into the Trader IQ program, a probe at the highs here, or the lows. What does that mean to us as traders? Okay, I'll teach you that in the class. So our value area. So you can see where you're supposed to be trading from. Trade from the edge. This is where you're going to have the highest probability of success in the market as long as you recognize when a market is in balance. All right, as I said before, there's only two phases to the market. Here's the other one, imbalance state. This is what the markets were doing today, weren't they? They finally broke out of a balanced trading area, and we now have an imbalanced state. Markets seeking value because of some, JP Morgan news, raised its dividend, some stress tests are coming out from the banks. And obviously the market thinks that we can continue to move higher. There's more demand, or economic events will drive the flow. The last few weeks or months, I should say, it was always what? It was the G word, right? Greece. And that was moving the markets in the imbalanced state. So markets will go from balanced to imbalanced state, and then again back into a balanced state eventually when we find acceptance of value again in that particular market. I think I have a chart here actually of the next, yeah, here we go. This was the NQ just a few weeks ago. It was in a nice balance here. And again, remember, it's time frame dependent. And and again, 2 days of balance here, 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 at least you know where you're putting. Like I said, you have a bias of a long bias. You can short at the unfair highs. But keep in mind, they're only scalps, if you will, or rotation back to the value area low before, looking for the move back up out of this range again. And of course, acceptance of value, consolidation, balance, you're looking for the imbalanced state. You're already positioned at the unfair lows. If it happens this time, great. If it doesn't, right, you're at least out at least part of the position on the unfair highs. And again, there may be economic events, news, what'll drive the flow of these imbalanced states in the marketplace. The point is that, through our Trader IQ program, it'll teach you to recognize when to put risk on, when to take it off, where to position yourself at key levels in the marketplace. Because you want to trade from the edge. You want to trade, like I said before, where you have the highest probability of success in the marketplace. So each day, the market is speaking to us, and the question is are we all listening to what the market's telling us? As I said before, you want to make sure that you have an understanding of the flow of the markets. You don't want to rely upon some sort of holy grail system, if you will, or someone else telling you where you should buy or where you should sell. In the trading room, what I do each and every day is kind of be the ship captain, if you will, and I'm directing people as to where we should be taking trades from. Again, I can't twist your arm to click the mouse. Well, I didn't get that trade. Well, did you click the mouse? All right. So the market's speaking to us. Are we listening? And again, when we look at this, how do you see the market through the eyes of the chart? Are you seeing it in the supply and demand? Are you seeing where the institutional value area is? Because that's important to us, because you and I cannot move the markets like we would like to think we could. It's the bigger guys, right? It's the institutions buying at key levels, showing us where the institutional volume and value is coming into the marketplace, so I can add that into the mix of our trading education. So when we look at a chart, we can see where there's balance, where there's imbalance, where the supply is, where there's demand in. Now this next chart is one of my favorite ones. Is your brain confused? All right, too much on your charts is going to cause confusion, because it's going to cause that analysis by paralysis. You get too much going on. You forget about price and volume in the marketplace, and you're relying upon, these indicators to make your decision for you. That's why you need to become an astute student of price and volume. You should get to the point where you should be able to just trade with no indicators and just look at what the market is telling us based on price and volume. What I teach you in the Trader IQ program is this. It's 3 simple lines. It's very powerful. It teaches you to recognize where you're to put your back at on one side of the market, either long or short, and it's based off of these 3 lines. Value area low, which basically means what? When something's undervalued or at wholesale, remember that prior chart. If it's at wholesale, what are you doing? You as a business owner, you've got a storefront. You need to, fill your store with inventory. Where are you going to go buy it at? You're going to buy it at wholesale. And of course, you're going to want to look to sell it at what? Retail, back at the value area high. The Point of control is the highest volume node of where something is traded around. So inventory-wise, that may be where the majority of trades have gone off. And you'll see in the next few slides here why that's important to us, because it shows us where the institutional levels are actually accumulating or distributing in a particular market. Again, the key thing to remember always is to start on the top side and look on the down. Start on the highest time frame and then drill yourself down. These are some trades from last week in our room. Again, you can see what we did for the week. We're up almost $2,000, and again, this is based off of a $10,000 account. And there's an entry price here, and there's exit 1 here, exit 2 here. It's based off of 2 contracts. You'll see some of them are listed as scalps, because sometimes it may be just a matter of, let's just go ahead and scalp this for a couple quick points, just get in, get out, especially around lunchtime. I don't like to play around lunch, but hey, if it pays for lunch, go ahead. The reason I show you this is because it's based off of the methodology here of what we do each and every day. We look at where the market is playing in the auction range. Now, what you're going to see here on the chart is some squiggly lines, of course. It may not mean anything to you, but it means a lot to us as we play value each and every day. As the market auctions back and forth, we want to, number one, ask ourselves the question, where is the market in relationship to yesterday's value area? Now, these 3 lines down here, here's your value area high, here's that point of control, and the value area line. There's your 3 lines. Now, you can quickly see this market here opens higher. And what does it do the rest of the day? Now, the shaded area here represents the current day's value area, all right, as it moves back and forth. You can see when a market gets outside of value, all right, it pulls itself back in, it will auction back inside of value. And then when it extends back to the downside, it wants to pull itself back into it. So we look at it from the eyes of where were we yesterday, where are we today, and we make a roadmap. We make a plan as to how we're going to trade the day based on where the market's opening in relationship to the prior day's value area. Now again, these are some trades from last week that we did. And one of the trades that I'll share with you here, and a technique that we use, is it's called the IB trade. It's the 1-hour highs and the 1-hour lows. And again, we'll go into more detail on this in the Trader IQ program. But the idea behind this is by waiting to let the markets facilitate trade, you get an idea about where the market may be actually headed. You can see here's 2 of the lines of the prior day's value area. So where's this market opening in relationship to what? The prior day's value. It's opening just about right at the value area low. So once the market auctions for 1 hour, you begin to get your IB. This is the IB low, and this is your IB high. A breach of the IB sends a market most likely in a directional move to seek out new value. Because remember, the blue shaded area here across this is the current day's value area. We can already see that we're out of value. This market is in an imbalanced state, because even on a smaller time frame, we can draw a square box around here and say, okay, here's a market that's balancing. Small time frame, it's all time frame dependent. It breaks to an imbalanced state. What is our job? Our job is to short back into the IB and write it down to some target objectives that we've already identified in the morning. So trade goes off down against these lows here because there was a high volume node. Notice how the market accepts value later in the day. Never even gets back to the IB high. The IB low here. These are very powerful trades. A lot of traders that come to me for coaching, I'll put them on this particular diet. They may not get trades every day. All right, they may not get trades every day, but it forces them to learn to wait, because people see the markets moving and they feel like they've got to be in the market. What I'm going to teach you in the Trader IQ program is just the opposite of that. You need to learn to wait for the market to come to you for your trade setups. So being able to identify where you're supposed to take trades from is very important. All right, so that's one of them. Here's another one from last week, and actually we could do the one from today. We could look at the S&P from today when it broke outside of its IB high. What did it do? It stayed outside of the IB the whole way. But the flow, when you're getting rejections, this is another thing in the Trader IQ program. A lot of people say, well, I put my stop underneath the low and I got stopped out. All right, but did you have enough information to go back into the trade if you got stopped out? Because what happened here is that the market auctioned back to the 1 hour lows here, close to a settlement price. Buyer stepped in, stops. Where do you think everybody's stops were, right? Underneath that low. What was this? This was nothing more than, again, probing the lows. We went long on this trade here, took it back to the POC, again from here to here. And again, you can see anytime you get failure below an IB, the market wants to go to the other side of it. It's an 80% probability trade, again, that I'll teach in the Trader IQ program, because knowing where to take trades from and knowing when to hold on to things, a lot of times you'll see where, you know, you have 5 or 8, 10-point, you know, target objectives. It's just a matter of the market getting there. Another good example, I didn't put a screenshot of this, but yesterday's trade was the same way. We were holding long for the IB high. It got there, and I told the people in the room, chances are it's not going to get there until we're done with the trade. Here it is right here, as a matter of fact. I did take a screenshot of it. We were long this thing because look at what happened in this market. Here's another IB trade. Okay. Probed it, we're inside of value, gets back inside of it. You know, again, we're long. We're looking for, the market's already told us it has a failure. This level right here, 60s, came off of a high volume node that we already identified in the marketplace pre-market. Look at where this thing went back to. It's called an IB to IB trade. When you have failure to go to one side, it's going to go back to the other side of it and auction back to the IB high. Plus, you're back inside of yesterday's value area, low, and the point of control. So the market made it there. It made it there, you know, by the time the bell rang at 4 o'clock. But, you know, again, the point is that the methodology works. The auction process is alive and well. Supply and demand is real. The price and, you know, price and volume is the only things that we get in the marketplace. So what we're doing is we're generating signals on our chart based off of price and volume. That's it. There's no special magic, no sugar-coated, you know, holy grail here. It's just teaching you to be a student of price and volume in the marketplace and understanding where the markets are actually potentially going to auction next to, all right? So this is what we do each and every day, and in our Trader IQ program, this is what you would learn. We go into all of this and understanding how to facilitate trade based on the value area of in the marketplace, the balance and imbalance states of how the market's facilitating trade. Here's some trades from just yesterday and today. And again, I didn't even put, some of the folks in the room got the bid. We were bidding 75 in the S&P on the pullback after the Fed announcement. If you got a fill, you see what happened, okay? And then these were the trades from this morning that we did. We were just scalping because the market was in a very small balanced trading area. It was FOMC. If the market's only doing this in a 2-point range, then that's all you should be looking for. Okay, so from, you know, last week's, you know, up about $800 from 2 days so far. So, and again, a lot of these trades were really scalps trades because of the market's not giving you much. But you can also see our drawdown, and you can see what, you know, where the money comes into play as far as the losses. There's going to be a lot more winners because, again, you're going to be taught how to position yourself at the unfair lows versus, you know, guessing somewhere. I don't like to play in the middle areas because the middle provides what? It's noise. I already want to be positioned in these trades before they even, you know, unfold, if you will. And how do you do that? Okay, so you ask yourself, do you have a map? If you don't, you should. You should have some sort of an execution plan each morning that you go through. It's almost like a checklist, if you will, if you were a pilot. You know, they're in their cockpit seat before they take off. They're doing a checklist, making sure everything's going to be okay before they take off. And then not deviating from it unless the control tower says, you know, you can't go that way because there's a storm coming. And us as traders, okay, if something changes where we get breaking news, you know, the markets would have not done what they did today had we not gotten the JP Morgan news out, you know, at the end of the day here. Fed announcement was a non-event. It's the same verbiage that we had heard, but it was something that would cause us to deviate from, if you were. Okay, and we were looking to buy it because we knew we were going to at least trade it back to 1380s. Didn't know we were going to get a home run, if you will, up into 1390s. So understand price and volume, the only two things we get from the exchange. This is so important. Again, becoming a student of price and volume. In our Trader IQ program, we beat this in to people because it's so important. It's not that you're relying upon some sort of an indicator. The indicators that we use are there as your roadmap. That's your map. It's what helps you identify when you're supposed to be looking to go long and when you're supposed to be going short. And of course, supply and demand, and what does it mean in the marketplace? Keep it simple. Keep it simple. Don't do analysis by paralysis and overcomplicate things in the marketplace. And of course, get into education. And again, one of the things that I want to mention here and again talk about is that in our Trader IQ day trading system, each one of you get the opportunity to go through this and to learn a methodology that will work in all market environments. It doesn't matter whether you're trading, the financial markets, whether you're trading corn, wheat, cattle. You use the same trading system in whatever instrument that you're trading. You can even use it on stocks. So if you're an equity trader, you could use it on equities. It's not something you're learning specifically for the futures market, but although that's what we focus in on. And again, our classes run Tuesday and Thursday evenings. They start about 4:30. They go from around 4:30 to about like to say, keep them close to 2.5, 3 hours if we can. It's based on questions and answers and how deep we get into that. And again, the training class size, I like to keep it to 20 to 30 people at max because it gets too big, and then I can't spend enough time with people to work with them to make sure that they're getting the attention that they need. And again, after the training, you go into the trading room for 2 weeks, and you reinforce what you've learned in the class. And again, the special price here that we're offering for the month of March is 25% off, $750. Regular price is $995. And again, I encourage you all, if you got questions, like I said, agents will be calling you guys. Write down the questions. Make sure that you have a full understanding of what it is that we're trying to bring to you. And again, I don't do this very often, and I don't even know when the next time will be, the next quarter or whatever, if we're going to do another class. Because again, then we've got our boot camps that we run people through. So keep that in mind. And again, if you got any questions, I can take a few here before we wrap it up. I want to thank everybody for coming here today and spending some time with us. If you got questions, you can direct them to me directly at rick@advancedfuturesintelligence.com or visit our website, and we'll be more than happy to work with you guys to get you being successful in the market. Obviously, if you're you're here today, you must be struggling, because otherwise you wouldn't be here. I've never met anybody yet to attend a webinar who was successful. Why would you go to a webinar if you were already successful? So again, thanks again to all of you. And if you got questions, I can take a few. If not, like I said, we'll be calling, our agents will be calling you, and you can get those questions answered then. All right? Yeah, the trading room is designed to take people from the class and to put them into the trading room as a reinforcement after the class, if you will, because you're going to reinforce things. We go through the documentation, if you will, the educational piece of it, and then you reapply it in the live markets. And you get 2 free weeks in that after the class is over. All right, great. Well, if there's no other questions, then let's call it an evening. I appreciate you guys stopping by, and we will we'll see you in the room. Good night, everyone.